Welcome back to the Easy VC Brief. I'm your host, Max von Polnitz, and this is your weekly espresso shot to deep tech venture capital news. 3 stories today, but I promise they are connected, even though we are starting with some public market news. Everyone's been trading AI infrastructure like it's one thing. Buy the chips, print some money. But the smart money has always known that the trade has layers, from the chips, the power that feeds them, and obviously the material science that serves the rack. So today, we're digging into those. Story 1. The big short guy is short the chip. If you know one thing about Michael Burry, it's that he called the housing crash and then Christian Bale played him in a movie. Well, Burry's back, and this time he's not shorting mortgages, he's shorting your GPU supply chain. At the end of June, he disclosed fresh short positions in NVIDIA, Tesla, Caterpillar, and the whole semiconductor ETF. But the one that got everyone's attention was Applied Materials, the company that literally makes the machines that make the chips. 2 trading days later, it was like he'd called his shot. Applied Materials dropped over 7% in a single session. It's now down over 25% in a week. Funny enough, that same week, Applied Materials had just told everyone the opposite. Record quarterly performance, and management now expects their equipment business to grow more than 30% this year, with demand so strong they said clean room space, not customer orders, is the actual bottleneck. So who's right here? Applied's own CFO said the company now has 8 quarters of forward customer visibility into orders for leading edge logic, DRAM, and advanced packaging tools, which is an unusually long order book for an equipment cycle that's historically been short. Applied's betting the AI build-out is different this time. It's one to watch. This is not trading advice, but I'm a big fan of the stock. Story 2, the picks and shovels behind the chips. Grid interconnections for new data centers are taking up to 4 years in some regions, and industry estimates now put US data center power demand roughly doubling by 2030. So the smart money is chasing anything that gets electricity to a GPU faster than a company can. That's why you're seeing rounds like Reed Semiconductor's oversubscribed $100 million raise for turnkey power delivery systems built specifically for AI data centers. Not a flashy company, but exactly the unglamorous infrastructure this boom actually runs on. And then, well, there's the wilder end of the spectrum, literally. A startup called Pentalasa, that's a name, just raised $140 million, backed by names like Peter Thiel and Mark Benioff from Salesforce, to build floating data centers powered by ocean waves. Go check this one out online. The pitch? Put your server racks in a giant floating tube out in open water, let the swell drive a turbine, skip the grid entirely. Here's my skepticism. Microsoft already ran this exact experiment. Their Project Natick program sank a shipping container-sized data center off Scotland for 2 years, and the results were genuinely interesting. The servers actually failed less often underwater. But Microsoft killed the whole program in 2024 anyway, because reliable servers don't matter if you can't service them, scale them fast, or get enough bandwidth off a subsea link to run serious AI workloads. Wave power sounds super elegant on a pitch deck. Getting multi-kilowatt GPU racks fed, networked, and maintained in the middle of the ocean is a very different, very unsolved problem. Perhaps these startups are solving that. Perhaps they're not. Story 3. Foothill portfolio spotlight. So Novalink. Well, this all brings me to a discussion on thermal regulation, keeping the chips themselves cool. Novalink, spun out of Carnegie Mellon, just closed another funding round building on an earlier oversubscribed round with us, Foothill, M Ventures, TDK Ventures, and a bunch of other strategics. Here's the problem they're solving. Modern AI chips have gotten so power hungry that flagship GPUs have gone from roughly 250 watts to over 1,200 watts in about a decade, and that heat has to go somewhere. Novalink makes a nanostructured thermal interface material, basically the layer of goo between a chip and its cooling system, that gets thermal resistance down to an industry record low. That's about 1 millimeter squared Kelvin per watt. If you remember your high school studies, Kelvin is a measure of temperature, which matters because the industry is moving from air cooling to liquid cooling to handle heat flux. The founder story is great too, though. CEO Ning Li spent nearly 2 decades in deep tech hardware at Seagate before going the startup route. And she's paired with 2 CMU thermal engineering researchers who actually built the material in the lab. It's the exact kind of unsexy, hard science company that becomes essential in this AI infrastructure build out. At Foothill, we love to back commercial spinouts with real technical chops. And it can often be difficult to bring these companies to commercial scale, but Novalink is pushing forward and we're genuinely positive. So that's the quick pod for this week. I hope it got you thinking more about your own bets. A quick summary on the 3 stories. Burry's betting the chip equipment trade is stretched. The smart infrastructure money is quietly chasing the power layer. And Foothill, our portfolio, sitting on a company solving the heat problem that both of these trades depend on. 3 layers, 1 build out, and they're all getting stress tested at the same time. As always, I'll see you next week. Keep building, and please comment and share this with someone you think it might be relevant. Anyway,